Hello everyone, this is Carbonomics. In a world full of boring investment advice to diversify, just keep buying a standard index fund every week and follow the same routine, it really is no wonder why the younger generations are drawn to day trading, options, or technical analysis. There's no vision or visible benefit. Most short-term strategies lose, but at least it's fun in the end, right? The common view of the stock market is that it's just about investing in large, boring companies. They do provide a benefit to society, or they wouldn't make any money. But there's no interesting hook to get people excited. It's purely based on the numbers or stock screeners. Most companies aren't like Tesla with a cult-like following that basically believes in Elon's vision of the future. And we saw a similar phenomenon occur with the movement behind the short squeezes of stocks like GameStop, AMC, and others. There's a common goal that millions of people are emotionally invested in, for lack of a better term. I believe we already have and will continue to see a similar concept play out for investing in companies committed to ESG principles. Investing in companies that you share, a common vision with. And this is really what I could see attracting a younger crowd of investors. But not just the millennials and Gen Z. No one wants to see the earth polluted and covered in trash. So environmentalism brings more than just investment returns. But a feeling like a retail investor can make a genuine difference in the world. In a poll ran in the United States before the midterms by the Washington Post and ABC News, nearly half of registered voters said climate change was very important or one of the most important issues to them. And a change in the polling this time around was that voters of all ages were more engaged in the idea, saying that climate change was a priority. This is really a motivating issue, and whether we like it or not, news and politics surrounding the debate continues to be dogmatic or even fear-mongering in rhetoric at times. For the groups of people that do believe climate change is a threat, they're becoming increasingly cognizant of it. And if climate change can motivate someone to vote, we could definitely see this affecting their investment decisions, especially if it's providing superior returns as well. Now, speaking on that topic, in the paper Dissecting Green Returns, professors from the Wharton and Booth Schools of Business inspected stocks returns from November 2012 to December 2020. They studied the returns of ESG friendly stocks and brown stocks, they call them, non ESG companies. The team tracked climate change concerns through 8 major newspapers and headlines. The professors found that green stocks did outperform their brown counterparts, but those returns were due to an increase in headlines or scares surrounding climate events, not necessarily the companies themselves. Specifically, the higher returns were related to an industry being greener than another, rather than individual stocks following more ESG principles themselves. And these findings stick pretty well. In many cases, the brown industries would most likely be more profitable or undervalued compared to green ones. But with the incentives of the media to continue being dramatic about climate change, I don't see this trend stopping anytime soon. Awareness around climate change, global mandates to cut emissions, and ESG targets continue to grow. And this topic is incredibly motivating for more people than the skeptics out there might think. I implore anyone that's listening to not only follow, but anticipate where money's going to flow. Financial markets are a liquidity machine at the end of the day. And while people assume that an energy crisis would spell an end for green policies and ESG, the sector is actually relatively flat or higher in many areas of funding. If you're looking to invest in environmentally friendly companies, you could choose the typical ideas like electric vehicles or renewable energy stocks. But those are the obvious, more likely overvalued stories. I've talked previously about the sectors to focus on in ESG related investing over the coming decade in a video I'll link in the description. The problems with investing in EV stocks. But now that we've gone over, how you can actually outperform investing in ESG over traditional companies, let's talk about some of the possible projects you could invest in right now. And if you want to genuinely feel good, like you're making an impact on the planet in your investing efforts, I believe that the voluntary carbon credit markets are the best place to start. Take Base Carbon, for example. This is a publicly traded carbon credit royalty company. Keep in mind, I don't currently have positions in any of the companies I'm about to mention, but I am looking to buy into, at least Base Carbon at some point in the future. But Base Carbon has taken part in funding a company in Rwanda called Del Agua. Del Agua is distributing, more efficient cook stoves in rural parts of the country to families in need. Specifically, the project is expected to benefit, over 2 million Rwandan households. And look at some of the impacts here. Impacting 3 million people, and even more than this since, these are outdated numbers. They've distributed over 1 million cook stoves now, avoiding, over 9 million tons of CO2 being emitted into the atmosphere, and reducing pollution as well as improving cooking standards to, positively impact the health of these communities, especially now that families can properly boil water to drink. Another possible stock to invest in, also funding carbon credit projects, is a company called Carbon Streaming. And the company's flagship project is a project called Rimba Raya in Indonesia. The project will prevent around 47,000 hectares of peat swamp from being converted to palm oil plantations. And this is protecting over 600 species of animals or plants. And this project covers all of the UN's 17 Sustainable Development Goals. And many of the carbon credit projects follow this framework. We'll point out how many of these goals, the project manages to achieve. But there are other opportunities to invest in as well, if not carbon credits. Pond Technologies, for example, is a company focused on capturing carbon dioxide out of smokestacks of coal or natural gas power plants and converting that CO2 into algae. And there are countless other examples of companies, working to help the environment like this, reducing pollution, recycling plastic, or transitioning energy sources. But in conclusion, there's nothing fascinating about putting 50% of your money into an index fund and 50% into a portfolio of bonds. But once you start adding in emotionally charged and political topics like climate change, that's when things start to get more interesting. And this is investing that you can feel great to be a part of, which is certainly different than gambling by day trading. But the passion can be transferred into buying more interesting companies, rather than trying to turn the stock market into a casino. That's my piece on it anyway. But yeah, that's going to be the end of the video here. If you liked it, please remember to like and comment, as well as subscribe to the channel. Thanks for watching.